Hey everyone, and welcome back. We're doing a deep dive today on something I bet you've already heard about: the Bank of Canada's interest rate cut. We're going deeper than just the headlines, though. We're looking at what people are actually saying about this over on Reddit, specifically the Canada subreddit.
Yeah, it's interesting to see how this news, which it can seem kind of technical, really affects how people are thinking about their lives and their money.
For sure. So, okay, let's start with the basics. What happened? The Bank of Canada cut the rate by 50 basis points, down to 3.25%. That's the fifth cut in a row. And the governor, Tiff Macklem, seems to be hinting that this might be slowing down soon.
Ah, right, yeah. It seems like they're really trying to walk this line between keeping the economy going but not letting inflation get out of control.
Yeah, and I remember earlier this year, inflation was a huge topic. What's the connection between interest rates and inflation anyway?
Well, when the Bank of Canada raises rates, it basically makes it more expensive to borrow money. This can slow down spending both for people and businesses, and that can really help cool down the economy when things are getting too hot and prices are rising too fast. Their target is to keep inflation at 2%, and it looks like that's worked because inflation is back down to that level.
So now that inflation is under control, they have a bit more room to lower rates again. But why would they want to do that?
Lowering rates is like giving the economy a bit of a boost. It makes it cheaper to borrow, and that can encourage spending, which helps things grow and create jobs. And remember, we saw that the unemployment rate went up last month more than expected, so that could be another reason why they're doing this now.
Interesting. So they're always kind of adjusting things, trying to find that balance.
Exactly. And that's where these Reddit reactions get really interesting. Everyone's experiencing this rate cut in different ways.
Yeah, totally. I was just scrolling through Sir Canada earlier, and it's a whole mix of reactions, from people feeling pretty optimistic to others who seem like they're expecting the worst. Let's look at some of these, starting with the housing market. Some people are saying this is going to make houses more affordable.
Well, lower rates mean lower mortgage payments, which could help people get into the market.
True. But some are worried it'll actually make prices go up even more. Kind of like what happened in Australia.
Yeah, that's a real possibility. Lower rates can increase demand, especially if we don't have enough new homes being built to keep up. And we know that's been a problem in Canada for a while now. So yeah, it's tough to say for sure what will happen with housing prices.
Right. Like we're all part of this giant economic experiment. And speaking of experiments, there's this whole vibecession thing people are talking about.
Oh yeah, the vibecession is not a real economics term or anything, but it captures this feeling that things aren't quite right, even if the data doesn't show a real recession yet. Like a general feeling of anxiety about the future.
Right. And some of the comments I saw were pretty dramatic, like comparing things to the 1930s.
Yeah, I get that economic uncertainty can be scary. And what's interesting is that this feeling can actually have a real impact on the economy. If everyone's feeling pessimistic and not spending money, it can actually slow things down even more.
Wow. So our moods can actually shape the economy. That's kind of wild.
Yeah, it shows how connected everything really is. And speaking of connections, let's talk about the Canadian dollar. A lot of people on Reddit are worried about it getting weaker against the US dollar.
Yeah, that makes sense. I even saw some people saying they're moving their investments to the U.S. to protect themselves. Is that something people do often?
It is for some investors. When the Canadian dollar weakens, your investments in US dollars suddenly become worth more.
I see, but isn't that risky too?
Yeah.
I mean, currency values change all the time.
For sure, it's definitely a balancing act. Like most things in economics, there are always trade-offs. Some people are comfortable with that risk, and others prefer to play it safe.
Okay, so let's look at how this is all playing out for regular Canadians. How is this rate cut affecting people's personal finances?
One of the biggest things is mortgages. People with variable rate mortgages are seeing their payments go down, which is great for them. But those who are locked into a fixed rate might be wondering if they made the right choice.
Yeah, I saw one comment from someone who was super happy about their variable rate dropping, and then another from someone who was basically kicking themselves for choosing a fixed rate.
Yeah.
It's amazing how this one decision by the Bank of Canada can have such different effects on people.
Yeah, it really shows how important it is to understand how these economic shifts can affect you personally. There's no single right answer. It all comes down to your own situation and what your goals are.
Okay, so we've got this rate cut, lots of different reactions on Reddit, and then concerns about housing, the vibecession, and the Canadian dollar. That's a lot to keep track of. What should we be focusing on? Where do we go from here?
Well, I think the next step is to zoom out a bit and look at the bigger picture. The Bank of Canada is doing its thing with interest rates, but there's a whole other side to managing the economy, and that's fiscal policy.
Ooh, fiscal policy. I remember some pretty heated debates about that on Reddit, too. Before we get into that, let's take a break and come back to explain what exactly that means, fiscal versus monetary policy.
Mhm.
Because I have a feeling that's going to be a whole other conversation.
All right, so we just talked about the Bank of Canada and them cutting interest rates. That's what we call monetary policy. But there's this whole other thing that governments use to try and control the economy. It's called fiscal policy.
Okay, I'll admit, I always get those two mixed up. Can you give me a quick refresher on what the difference is?
Sure. So think of it this way. Monetary policy is all about the flow of money in the economy. They're using interest rates to try and control that. And that's mostly handled by the central bank, which for us is the Bank of Canada. Fiscal policy, on the other hand, is more about the government's decisions on spending and taxes.
Oh, okay. So like if the government decides to build a new highway or something, or like cut taxes.
Exactly. That's fiscal policy. And there are a lot of different opinions about which one is more effective, fiscal or monetary policy, especially when things in the economy are a bit shaky.
And it looks like people on Reddit were definitely debating that. I saw a bunch of comments saying the government should be doing more on the fiscal side, like maybe investing in more infrastructure to create jobs and boost the economy.
Yeah, that's a pretty common argument, especially when interest rates are already low, like they are now. The thinking is that maybe the Bank of Canada has done all it can with interest rates, so maybe it's the government's turn to step in and do more.
But doesn't that usually mean the government goes further into debt? I saw some comments talking about Canada's debt to GDP ratio and how that's a concern.
Yeah, that's the trade-off. If the government spends more, it often has to borrow more. And that debt to GDP ratio basically measures how much debt a country has compared to the size of its economy.
So is a high debt to GDP ratio a bad thing?
Well, it depends. There are a lot of factors to consider. Can the country pay back its debts? What are the interest rates on those debts? How's the economy overall looking? It's not a simple answer. Some economists think Canada's doing okay, and others are more worried.
Seems like economics always involves trying to balance different things.
It really does. And then to throw another wrench in things, we have to remember the whole Trump factor. Remember we talked about those comments about possible tariffs from the U.S.?
Oh yeah, that's right. It's like as soon as we think we understand what's happening, something else changes.
That's just how the global economy is. It's complex and constantly evolving. That's why it's so important to stay informed and make financial decisions that are right for you.
Okay, so we've got this rate cut. Lots of different reactions from people, concerns about housing and the vibecession and the Canadian dollar, and now this whole fiscal policy thing. What are some of the main takeaways for people listening? What can they do?
Well, first of all, don't panic. It's easy to get caught up in all the headlines and doom and gloom. But the economy goes up and down. That's normal. It usually finds a way to balance itself out eventually.
Yeah, but that's easier said than done, right? When your investments are going crazy and you're trying to figure out if you should buy a house or not.
I know it's tough. But that's why it's so important to focus on what you can control. Make sure you have a good financial plan, don't spend more than you earn, and keep saving for your goals. And if you're feeling lost, talk to a financial advisor.
Good advice. It's easy to get caught up in all the emotions of the market, but having a plan and getting advice can really help.
For sure. And remember, the more you know about economics and your own finances, the better. Keep learning and asking questions, and don't just assume everything you hear is true.
I like that challenge everything. Sometimes it feels like the financial world has its own language that we have to figure out.
Yeah, it's all about breaking these complicated topics down and making them easier to understand.
Speaking of making things relatable, I got a question that's been on my mind this whole time. And I think it really gets to the heart of what a lot of people are struggling with right now.
Oh, okay, I'm curious.
So here it is. Knowing everything we've talked about, the rate cut, the vibecession, all the housing stuff, if it were you, would you choose a variable or fixed rate mortgage right now?
Wow. Yeah, that's a tough one. It really makes you think about all the stuff we've been talking about.
Yeah, it does. On the one hand, the variable rates are looking pretty good right now. Payments would be lower. But then I keep thinking, what if rates go up again?
That's the big question, isn't it? No one knows for sure. But I think whether you choose variable or fixed really depends on how you see the economy overall.
Right. Like if you're thinking about variable, maybe you're feeling optimistic about things getting better and rates staying low.
Yeah.
But if you're more drawn to fixed, maybe you just want that stability and not have to worry about things changing.
Exactly. It's a personal choice. There's no right or wrong answer. The important thing is to understand what you're getting into and pick what works best for you and your goals.
This whole conversation has been a good reminder that economics isn't just about numbers. It's about real people's lives.
It really is. And that's what we've been trying to do in this deep dive, connect those big economic ideas to what's happening in people's everyday lives. We've looked at the rate cut, what people are saying about it on Reddit, and hopefully given you some things to think about as you make your own financial decisions.
We've covered so much today: inflation, unemployment, the vibe session, the Canadian dollar.
Yeah.
It's been like a crash course on the Canadian economy.
We even got into that whole fiscal versus monetary policy debate. It's been a lot of information, but I hope you've learned something about how all these things are connected and how they affect you.
So, as we wrap up this deep dive, here's my main takeaway. Stay curious, stay informed, and don't be afraid to ask questions. Because knowing what's going on is the best way to navigate all the ups and downs of the economy.
Absolutely. Thanks for joining us on this deep dive, and we'll see you next time for another one.
Until then, keep learning and keep asking questions.